Okay, let's get started.
Okay. Do you want to start?
Okay, I'll start. Okay, guys, welcome to our hot deals update. We're streaming live here. This is our first time we're streaming live across all our social media platforms, and we have been running a lot of webinars on the Real Estate IQ platform to help share real estate investment knowledge, and also introducing the movers and shakers to you of the real estate investment market. And we're just so excited to take our live events to the next level and live stream these events to you. So welcome for joining us. Now in this hot deals update, we're going to explore the trends that are shaping the real estate investment market today. And we're going to be giving you live guidance and share the top markets you need to be looking at for your next investment deals. So a couple of housekeeping notes. The recording of this event will be immediately available for those who have registered for this webinar. And if you're just watching this live right now and you haven't registered yet, you can use the link. We're going to share that on the comments and the chat. Make sure you register so you have immediate access to this recording. Another housekeeping piece is make sure you ask your questions and comments on the chat, and we'll address them either live or after this event. All right. So, okay, let's get started. We'll do the screen share. Next slide, please. Okay, so let's look at the home prices, right? Home prices has reached all new high since early 2024, despite the skyrocketing interest rate that we are paying so much attention to. It ended up at about 6.4% as of February. And you can see that it has continued to gone up in terms of home price index. If you're already a homeowner and you hold real estate properties, that's good news because your asset is appreciating. And if you don't have real estate assets yet, don't fret. We're going to be looking at where all the best opportunities are, and you'll be holding your real estate properties very soon. Now, home prices are higher than they were during the pandemic. And we have a chart here that shows the home price appreciation from prior to COVID. A couple of states and markets that you can see where we're looking at a big increase in terms of home appreciation. And there are a couple of long run trends that are driving this. And a couple of things we're paying attention to is that the home prices are much higher in the West and along the East Coast than in the middle of the country. And there is also a positive relationship between the population and home prices. Here are the couple of top Northeast and Midwest cities that are projecting to have the highest home price gains. And a couple of top 5 locations where we're seeing the biggest home price rising significantly are Detroit, Michigan, Tampa, Florida, Dallas, Texas, Kansas City, Kansas, and St. Petersburg, Florida. We're looking at for these 5 markets, we're looking at almost 200% of growth in home prices on average. Now, in terms of the affordability, we're 34 out of 50 metro cities now require at least $100,000 of income to buy a typical home. And the most expensive cities are in California, Washington, D.C., and in New York. And when we look at the 30-year mortgage rate, right, that's kind of underlying this, as of July 2024, the mortgage rate for 30 years is at 6.625%. Okay, that's the red line you see up there. And the Fed fund rate is staying around close to 5%. That's the blue line. In fact, I just checked that the Fed fund rate is a little bit above 5% right now. And two things happen, during this high interest rate environment. Number one is that it keeps sellers from selling their home, especially the ones that have locked in a low interest rate because they want to keep their old rate for the low cost of kind of paying for their mortgage cost. And number two is that it could create hardship for those who have bought their home during the high interest rate. And we're seeing a prolonged high interest rate environment here. So that could turn into opportunity for real estate investors. Next, we want to continue to look at the different costs of housing. We just looked at the interest rate and the house prices. This is a chart for home insurance. So home insurance rates have been going up. And the couple of states that see the highest surge are Texas, Colorado, Arizona, and Utah. By city, Los Angeles, Chicago, and Houston are the ones that are experiencing the highest cost. And we're looking at, the monthly rate ranging from $150 all the way to $400, a little more than $400 per month. Next is the property taxes. So we see the sharpest rise in property taxes in the past 5 years. There was a 6.9% increase on average of 2023, almost doubled since the last year. Now the top 5 property tax counties are Essex, New York, New Jersey, Bergen, New Jersey, Nassau, New York, San Mateo, California, and Santa Clara in California. So, obviously, property owners, you have already been seeing these property taxes. And, we personally have been engaging in a lot of property tax protests because of this hike of property taxes. So now let's look at the buyer's trend, okay? We are looking at a influx of two types. One is all cash buyers. The primary residence buyers are primarily buying it with all cash now. One explanation for these home buyers is that they're more likely to move to the long distance. And the next chart, we're going to show you that a lot of them move, 29% of them move over 500 miles. And, we are seeing that really aligning with kind of job growth in the states. So here, the red, the states that are color red are the ones that have a negative net migration, which means the population is moving away from the states that are darker in red, moving to the states that are darker in blue. And, the top 2 markets, the top two states that have the most population growth, as you can see, are the darkest is Florida, followed by Texas here. When we also when we look at, so before we move on to the next slide, you can see that there are a couple of top 10 positive net migration states, and those are the states where we see higher population growth, and also for real estate investors, you can see that the housing demand is going to be higher in those markets. So next, we're going to be looking at the housing inventory. So as I was saying earlier, the existing home sales has been much, much lower, and that's the red line. And this is due to the fact that a lot of folks have locked in a low interest rate in their mortgage, and they're hesitant to sell their house and buy it at a much higher rate. So they're holding on. So we have a pent-up supply in housing and in single-family homes in general, and that's why we're seeing the supply of existing homes. The inventory has been dropping. Now, on the other hand, that creates a demand for housing still, and because earlier we were experiencing a much lower interest rate during the pandemic, and that created a lot of housing starts. So we're also seeing the blue line, which is the new home sales, trending up. The new home sales inventory has been rising. So the 5 hottest sellers markets, we want to share this with you. Let's keep going to the next. So these are the 5 hottest sellers markets right now. Here we have Indianapolis, Baltimore, Phoenix, Columbus, and Tampa. And this is based on a ratio called sale to new listings ratio. We're not going to explain what the ratio is, but basically it's a measurement. And the higher the ratio is, the harder it is for the sellers. So if you're a seller in these markets, right, or you become a seller in these markets, you can still demand high prices. Next, we're going to look at the rent, right? Kind of the rental market and multifamily. And we can see that, there's official government data versus the unofficial private sector data. In the official government data, we see that the rent is still, the rate of increase has come down. It's still increasing, but it has been calming down a little bit. In the private sector data, it's hovering around 0. And both is kind of indicator that tells us that rent has now stabilized to a certain level. And a couple of rent in traditionally affordable cities like Cincinnati, they have skyrocketed. While in the Sun Belt metros like Jacksonville and all that, they're seeing some relief in terms of rent dropping lately. So here we want to share with you that the top 5 area with the highest rent cost: New York, Jersey City, San Francisco, Boston, and Miami. Now, within these, New York's rent has been going up. Jersey City has gone up. San Francisco has dropped by 1.7%. And Miami in Florida also has dropped 4.5%. And as you can see, so here on this chart, you have kind of two groups here. The first group are the metro area where the rent is way outpacing the wages. And then the last 4 U.S. cities where wages is actually outpacing rent. So what that means to us as real estate investors is that in Milwaukee, Portland, Minneapolis, and Houston, the housing is still quite affordable for multifamily homes and for renters. So it's good news for landlords. You may have a potential opportunity to keep the rent as is, whereas the top 6 cities up here on this chart: Tampa, Miami, Indianapolis, Jacksonville, Hartford, and Atlanta, what you see is that rents have outpaced the wages. So now we're looking at a potential housing affordability kind of question. A lot of Americans are struggling in these cities to keep up with the rent. Now, let's look at the household growth. So what we see is, population growth. There are now 70 million more people, since about 20 years ago. And in terms of the households are growing despite the high housing costs. And this is driven mainly by Gen Zs, starting new families and, joining the workforce. And also a lot of immigrants joining our country. And so all this is going to create demand pressure for households. So the top 5 highest household growth is Austin in Texas, Raleigh in North Carolina, Orlando in Florida, Charleston, and in Houston. Next, we want to share with you the top 5 emerging multifamily markets if you are in the multifamily space. These are the top 10 cities, top 10 markets for you to look at based on investment volume. Okay, next, let's switch gear and look at the foreclosure activities, right? We're looking at, based on the hot deals, we want to know what are all the hot markets to invest in, but also we want to know where are all the foreclosures, which are what we are looking for as real estate investors. So foreclosure has been dropping. And, back in 2008, we had a big surge of foreclosure. Now, during the pandemic, because of the forbearance, that stopped a lot of the foreclosures. And now after, 2 years after the pandemic now, the numbers have been steadily going up, but we're nowhere kind of near the level of pre-pandemic yet, and certainly much lower than 2008. So as of June 2024, there are 177,000 properties going into foreclosure, which is a ratio of 1 in 5,000, about 1 in 5,000 homes in America. So we're really looking at like 0.02% of houses that are going into foreclosure. Now let's look ahead a little bit and look at the delinquency number, because that's going to predict what the foreclosure numbers look like that are going to go into foreclosure. So we're seeing the number trending down in terms of serious delinquent mortgages. So what that's telling us is that, kind of expect the foreclosure numbers to kind of stay where it is, or maybe even come down a little bit. So there's going to be less and less, a little bit less foreclosure, or kind of flat line in terms of number of foreclosures that are going to be coming onto the market. So next, we want to share the top 5 states that have the highest foreclosure rates. Right. So now, again, when we look at the national data, while it's useful to understand how the market's going in general, as investors, we also want to focus on local markets, because local markets tend to behave a little bit differently because our microeconomics is a little bit different. And so the top 5 highest foreclosure rates are New Jersey, Illinois, Florida, Nevada, and South Carolina. So if you're looking into places to kind of expand your marketing operations to buy foreclosure properties, these are the states that you may want to heavily consider. Next, we want to share with you the top 10 counties. So these are the top 10 counties. Cook County is Chicago in Illinois. Los Angeles. Harris is Houston. And then, I guess what I would recommend is that you take a screenshot of these. This is the number from Adam. All right. To summarize, welcome for joining us. We put a lot of hard work in gathering all this data from over 10 different sources, from NAR, National Association of Realtors, Adam, and also Real Estate IQ proprietary foreclosure data. To kind of summarize, we're looking at, I have a summary note here just to share with you. The housing cost has been going up. We're talking about house price has gone up, home insurance has gone up, property taxes have gone up, and the interest rate have gone up. Those that bought at a high interest rate are more likely to experience financial hardship. And those who bought at a lower interest rate, they're not incentivized to sell. And that creates a climate of dropping existing home inventory and rising new home inventory. We also share some of the hottest sellers markets with you. From a rental and multifamily standpoint, rent has steadily stabilized. But all this rent that has been increasing has also affected affordability. And we shared with you some of the emerging multifamily markets. Foreclosure has been declining. and serious delinquency has been going down. And we share with you the top 5 states and the top 10 counties of foreclosure starts. So if you're interested in hitting these kind of markets that are trending up, our recommendation is that you sign up for a one-on-one consultation, and we'll give you guidance and kind of share with you some additional numbers of what each of these markets look like and how it's going to impact your investment journey. So next up, we hope you have enjoyed this market hot trends. Next time, we're going to explore this really cool question we've been wondering for a while. We've been talking about interest rates. How does interest rate affect foreclosures? And specifically, of all these recent foreclosures, what percentage are going into foreclosure because of they bought it at high interest rate and they're no longer affordable? And what percentage of the foreclosures are bought during the time of low interest during the COVID, and now they're hitting the foreclosure? And knowing that, it's going to give us a lot of insight in understanding, kind of the economic situation and financial situation of the potential seller in general. So we're going to be exploring that next time. Okay, so thank you for joining us. We got a couple of links here for you to follow if you want to learn more about Real Estate IQ and what we do. And follow us on Facebook, LinkedIn, YouTube, Instagram, and Twitter. Okay, so thanks for joining us, and look forward to our next hot trend. Oh, also, if you have any trends or questions on which are the hot markets you want us to look at and explore, feel free to use the question and the comments section to ask your questions. All right, thank you, everybody. See you next time.